FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is July 2nd, 2019. Well, hey, as we're watching gold, literally, as I've been watching, earlier in the day, it was up $7 the ounce. Now it's up $20.20, 2020, hey, which is the year that's coming up. Right, trading at 14.04, silver up 9 cents the ounce. Bid is 15.20. Well, no surprises here. Maybe our pullback is over. I tend to think perhaps the market's a little bit overbought, but I'm not going to second guess it for sure. Hey, don't forget, we're having our Bitcoin contest. Guess the price of Bitcoin midnight, July 20th. And beat my guesstimate, which is 66.50. That isn't going to take much effort. And submit your entry no later than July 14th, 11:59 p.m. to enter. First prize is, well, if we hit 1,000 entries, the first prize will be 100 pre-1965 quarters, and they're 90% silver. And the first five runner-ups will be 10 pre-1965 quarters. If we don't hit 1,000 entries, and I think we're close to 550, 600 right now, if we don't make it, grand prize 40, and runner-up each get 1. First 5 runner-ups. Well, anyways, you want to know what the email address is to send in your entry, kl@kerrylutz.com. Make sure you put Bitcoin followed by whatever in the subject line. Well, somebody who's an expert in silver, spent his whole life studying these markets, is with us now. I'm talking about David Morgan. David, it's always great to have you back. Hey, themorganreport.com. David, I mean, we were talking a month ago wondering when is it going to happen? And it's happened, right?
Yes, it's happened.
So tell us where we were and tell us where we are and tell us where we're heading.
Okay, let me get this.
That's not too big a task, is it?
No, I don't think so. I was kind of preparing myself for this, Kerry. So excuse me, audience, as I look to the other screen here. But so we had to break out, and I've been on many shows, yours included, Kerry, saying that, until we break the 1350 level basis the U.S. dollar in gold, really nothing's going to happen. In other words, we're stuck in this overhead resistance for 6 years. Well, yes. As you just stated, it happened. And when it happened, it took gold from like the 1350 level up to about 1365. The next day, it went from about 1365 all the way up to 1395. The next day, it went from 1385 up to 1415. The following day, 1405 to 1425. And the following day, 1415, all the way up to 1445. So we had like almost $100 run on gold in 1, 2, 3, 4, 5 trading sessions. Not bad.
Yeah.
The other thing that's key is the volume on those up days was substantially strong. So we always look for a breakout to be followed consecutively. And we want to be certain that the volume is significant, and all those parameters are met. Nothing grows in the sky. There's just a consolidation, a pullback, and that's normally expected. The thing and usually the breakout point is tested. So the breakout point, you can argue, is at 1350, 1367.25. I mean, the general round number is 1350. I'm going to use that. I think we are not going to get that low. I think we're going to get in the 1380s, which you've already seen. 1380. And then we'll probably get into a new trading range. As you mentioned, there's a $20 move in gold today. So bull is back, and we're going to see more volatility. And you can take advantage of that volatility if you know what you're doing, but you got to expect it. And so it's going to be difficult for some people to, one, get back into the market, and two, to ride the market all the way through.
Hey, well,
because bull's function is to shake off a lot of people on the way up. What you really want to do is there's several ways to do it, but one good way, I think, is to take a position that is your core position, you never trade, and then you can trade around that, which is what I do, because the volatility as high as it is, you can make some really great trades, but you don't want to make 7 trades in a row that are all perfect, and then the 8th one you're left standing at the bus station watching that thing take off, and you're afraid to get back in because you got to pay higher than what you just sold at.
Tell me about it. I know it's these are difficult times. The stocks haven't responded real well yet. I mean, last month we saw the TSX Venture hit 585, go down in the face of all the other world stock markets going up. How long is it going to take for the stocks to follow suit? Because we've been talking about this for years already, the way it was going to work, and the stocks have been holding back so far.
Are you talking about the mining shares, right?
Correct. Yeah, the venture.
Yeah.
Primarily.
Yeah, I anticipated this question too, so forgive me, audience, as I scroll rapidly to get another one I wanted to bring up, because I anticipated this question. I just didn't bring the, let's see, there we go. All right, so this is at the end of June, 28th of June, so bear that in mind. It's not today, but it's very close. So, as you said, Carrie, basis from the start of the year, well, halfway through the year, which is the end of June, gold was up 10%, palladium was up 21%, platinum was up 5%, and our favorite silver was off 1%. The gold-silver ratio was up 11%, is around 92 at the time of as of close last week. But here's what you see is you've got gold up 10%, and the XAU and HUI are both up about 20%. So they are outperforming, but at a factor of 2 to 1. And normally in a bull market, it's at least 3 to 1. So in other words, if gold's up 10%, you do expect the XAU to be up like 30%. Right. It's only up 19%. So are they performing well? On an index basis, they are. But are they performing normally? The answer is they're not.
And that's the one kind of note of caution that you would have on this rally, because normally, like you say, they're going to perform. You're going to get leverage over what's going on with the actual physical markets, and we're not. You got any theories or suppositions as to why?
Jump in on. I mean, interrupt and get excited. No, I think there's a lot of people, believe it or not, that are still questioning whether this is a breakout or a fake out. Even though, as I outlined, the number of days, the volume, the way it's acting today, doesn't guarantee it is. I mean, I'll be fair. I mean, look, if gold, falls down. The other thing is the fundamentals. I mean, I said in a recent interview, or maybe it was an update for my members, I forget which, I do so many, but if everything goes great at this G20 and, China and the U.S. was kiss and make up, and that's kind of what happened. I mean,
exactly.
Trump pretty much conceded to a lot of Xi Jinping's requests, or China's requests, I guess you could say. And, gold was off yesterday, but as you said, it's back up today. So the point being that this is, as far as I can tell, a real breakout. But I think, again, going to the stocks in your question, a lot of people are just not convinced, but they're just waiting, skeptical, anticipating, is it real or isn't it? And they're going to be certain before they get back in the market. So as those people come back into the market, it will strengthen and the momentum will build, and momentum will build on itself. And all of a sudden you'll see gold, 1450 by the end of the year. It's almost hit that already on a spike. Right. So I really think, we're there. And will the stocks participate? Yes. Will they outperform? Yes. Will they get to that ratio of 3 to 1 or so? Yes, I think eventually they will. It's maybe just going to take a little more time.
It may be higher because the fundamental situation for new discoveries of gold is far worse than it was in 2011. We've not seen any major strikes in close to a decade. And the majors are seeing their reserves. They've been living off their reserves, off the feed corn, if you will. So that's one thing. Hey, going back to the market's behavior. So we're also, and our good friend Jordan Roy Byrne has been kind of preaching this thesis for months now. We're seeing higher highs and higher lows. And one other technical thing, we saw effectively a sideways channel for the past 3+ years where gold really was trapped in this channel and couldn't get out. And that's another really powerful technical formation that when something breaks out of a channel, regardless what the market, on the upside, and when it does, it generally does so violently, and that's generally the start of a major move in that market, regardless what it is, just from a purely technical standpoint. So we've got the fundamentals lining up in alignment for a new bull market in precious metals, and we've got the technicals lining up. Hey, silver, as usual, is the laggard, but at some point, silver is going to jump into the lead, right?
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Well, I believe so. And just to add on to what you said, which is very powerful, is, we've got to remember that was a 6-year resistance level. So now you've got, the resistance becomes support. So now you've basically got 6 years worth of support at the 1350 level basis the US dollar price of gold. You got to remember, the gold's making new highs in other currencies. I mean, the Aussie dollar, it's up to like 2,000 an ounce. And if you were holding your gold in Canadian dollars, you're pretty happy. It's only in U.S. dollar terms that really gold has lagged so badly. But the point being that it's a lot of support now. We've got 6 years of support. Again, could it falter? Could it test that level and break to the downside? Yeah, it's possible, but pretty remote.
So
will silver participate? Yes. Gold's going to have to lead the way, which I've been saying for months now.
Correct.
And it's got to get, I think, to a level where, as you said, Kerry, it's such a strong price, and no one knows that magic number, 1550, 1600, I don't know. But silver all of a sudden is so cheap relative to gold, and the momentum is there in the stocks, and probably the silver stocks are actually performing fairly well. Then there'll be swaps. There'll be people that will move, from gold into silver. There'll be spread trades. The hedge funds will take advantage of it. And since silver is such a small market, any new buying, which is what it'll take, will start to narrow that spread. And the spread starting to narrow will get more participants because they see that trade is working. So there'll be more people jumping in on it. So I still think in a longer term, you'll see silver outperform gold on a percentage basis, but it isn't going to be instantaneous. I think right here, right now, we'll go back to what we said already. And that is there's still a set of people, markets, market makers, hedge funds, family offices, you name it, that are still sort of cautious. Is this real? Is this really taking place? I think I'll wait a little longer and make sure.
Yeah, this is exciting, David, because we've been talking about this already for years, and it's been like paint drying, watching this thing. And, and then the naysayers, all step in, all the conventional finance people is like, well, gold, the Warren Buffett's, well, you spend a fortune to dig it out of the ground, then you dig a big hole and you bury it, and you have to spend a fortune to guard it. So what is the point of this barbarous relic? But quite clearly, and tell me if I'm wrong, we're seeing that it's really coming back. The fear element, the value element, according to Charles Nenner, him, great cycle forecaster, he believes that inflation is coming back with a vengeance. Not that it ever really went away, but it went away in the government stats, kind of like unemployment went away. So everything's kind of lining up. And I think it really does boil down to cycles, though. And really, it's still kind of cheap. I mean, at what point do most of these silver miners actually become profitable? They kind of need like $20 silver to start going in the black here and to make their projects economic.
Yeah. Well, you brought about 3 ideas to my mind. Number one is Howard Buffett was a big proponent of honest money, unlike his son Warren.
Yes.
And I did in fact, it's still in my members only section about Buffett and silver.
Mm-hmm.
And then, the $20 silver would put most of the primary silver miners into black. But really, there's another part in the member section called Archie's Rule. And to break it down in the most basic terms, really for a miner to be, let's say, happy. I don't know the right word. Not only profitable, but able to
optimistic
profit and explore and, pay all their bills, pay the good, dividend to their shareholders, continue operations and explore for new material. You need about a 2x. So if you're a miner and you're mining it at 15, you need a 2x. So you need a $30 silver price.
Yeah, of course.
So a $30 silver price, as I just said, will pay all the bills and give you, plenty of margin to not only continue your operations, but go out and explore. And most people don't really factor in everything that's required for a mining operation because all mines end in failure. You could have the richest gold mine on the planet, and it could go for 10 years. But once you take that last ounce, that mineable ounce out, that last piece of ore, you're done.
Yeah,
it's gone.
Oh,
yeah. And this is the
wasting
problem
asset.
The gold industry is peak gold. I'm pretty much convinced is here. Unless could there be a big discovery that blows things? Well, yeah, it's possible. But the scientific knowledge and the way we explore now with satellites and all this stuff that's out there, to look at basically the whole planet and determine where the anomalies are, I'm pretty convinced peak gold is here. So anyway, back to you, Kerry. But exciting times. I think it's time to get on board. If you're not invested, you should look at it. If you are, and you're holding a bunch of dogs, you might get rid of some of the dogs and buy cats. Meaning you should maybe clean up your portfolio. That's what we've been doing in the Morgan Report for quite some time. I'm very happy with what we have left in here. We've gotten rid of some names that are pretty popular names that we may come back to, but right now we're pretty much geared for higher performance portfolio.
Yeah, agreed. I think this is really going to be major, bigly, as someone would say. And I guess now it's kind of just sit back and wait. One thing that's really fascinating and shows how gold leads is the way that the gold to silver ratio has kind of exploded here over 90. I haven't calculated it yet today, but it's gone up again. Let's face it. With if gold's at 1404, I'll figure it out right now. It's well over 90, right? I mean, let's see. I think it's at it's 92, right? The gold to silver ratio. That is, when it gets up that high, you got to start wondering what's going to trigger it.
Well, one thing about the gold silver ratio at those levels is, I've been asked about that several times. And one thing I really failed to mention is once it gets into that level, it usually is like imminent that it's going to turn around. I mean, one thing about those really high things is they're spikes. They don't last a long duration of time.
Mm-hmm.
So since we're there, it doesn't mean we're not going to 95 or 98 or 101. I don't know. What I do know from history, if history repeats it, it usually rhymes anyway, is that is signaling that, okay, that's really another clue that we have that this, isn't just a fake out. It is a real breakout. And silver is clawing and, it's just not wanting to participate to the chagrin of myself and many others. But if we go back to the original bull market that started in 2000, gold led silver for about 3.5 years before silver broke out.
Right.
And most people don't know that because a lot of the silver stocks perform fairly well. So we are in a situation that is similar, I think. Gold has the 6-year, barrier we talked about, and silver's lagging. And, if you look at the chart, gold, as Roy Byrne pointed out, has been making higher lows all the way up. And now we have a breakout, whereas silver basically is almost double bottomed. I mean, it's in the 14 handle and really is flat. So it's lagging gold, obviously. And you could say it's lagging by 3 years because the breakout for gold, or the bottom in this bull market that we're in, was the end of 2015. So December 2015, so 2016, 17, 18. Here we are in the middle of 2019. So 3.5 years. And that's kind of the lead that gold has on silver, I would say. So, we could see it repeat. I'm pretty convinced, again, that silver is going to do fine. but it is very much causing problems for a lot of silver investors. It's like, well, gold's moving. What's wrong with silver? And going back, well, it's kind of history repeating.
And answer is nothing is wrong with it, right? It's behaving the way it's supposed to behave.
I certainly have to admit I could be missing something, but I don't see it at this point in time.
Patience. Patience is the byword. And I'm thinking once we hit 1,500, the media will have to stand up. The mainstream financial media will stand up and take notice. Yeah, they mention as an aside, oh, by the way, gold hit a 6-year high, right? But at 1,400, it's not a sexy number. 1,500, 2,000, 1,750, those are sexy numbers. But 1,410 just doesn't have that ring to it. And let's face it, nothing happens without the public eventually getting in on the bandwagon, often too late, or often, way after the market's really peaked and is getting ready to go down. We got a long ways to go here, though. This could conceivably, I talked to guys like Nick Santiago in the money stocks, and he's like, this thing's going to go on till 2022 at least. And I think I tend to look at it another 3 years at a minimum. That wouldn't be out of line at all, would it?
No, in fact, I'm not a big Elliott guy, but if this is the third leg up, it's the shortest in duration relative to the entire move, and it's the most powerful. So this is where you get into this run to gold situation. That would happen basis on, giving up on the dollar, or a lot of fear surrounding the U.S. dollar's viability. So you'd have this run in the gold will start going parabolic. That would feed the momentum. You get a lot of people that never thought of gold or actually made fun of it, starting to think seriously about buying it and move into the market, buy a gold stock or something along those lines. Silver is still relatively cheap compared to gold. The ratio may have dropped, but if gold's in the 3,000, 4,000 range, pick a number. I don't know what the exact number is. It varies person to person. It's like, well, half my life savings buys one gold coin, but half my life savings will buy this, quarter bag of silver. I'm buying silver. And since this is a small market, you'll see the ratio narrow. So that's the final phase of this bull market. Mm-hmm. And I think we're going to see that probably, as your friend outlined, in 3 years, 4 years, no one knows. But I'm pretty convinced that markets have signatures. And all markets. I mean, you see an over-exuberant stock market, as Alan Greenspan said. You have a housing bubble, as we all know from the 2008 crisis. You have a tech wreck, as we saw in the 90s. You have a Japanese blow-off top, like you saw in the 80s. So these are markets, and the gold market is a unique market. The reason it's a unique market is it's not a once-in-a-lifetime thing. It's once-in-several-generations thing, where gold does an accounting, as Mike Maloney says, for all the fiat that's been printed, and basically accounts for all of that phony money. And this is when the paper ratio of gold actually equals the amount of printing that's taken place. And if you did that math today, you'd come out somewhere north of $8,000 US dollars per ounce. Mm-hmm. And does that mean gold's getting there? And the answer is we don't know. What we do know from 1980 is that the ratio at that time sounds ridiculously low, Kerry. It was 400.
Yeah.
$400 the ounce gold in US dollar terms would have done a 100% complete cover ratio for all of the M1, printed money only, not M2, not loans, not credit. And it went to 800 or over 800. Mm-hmm. So I wrote an article about that. You might want to review it. It's called Engineering the Price of Gold. It's still in the archives somewhere. You can find it. I haven't taken it off the net. And look at that. And now just do a similar thought process about how much, let's say, printing press money has been thrown at the U.S., thrown at the world.
The world, yeah.
And what has happened is huge distortions we never thought possible. You put your money at length, in other words, multiple years, to make sure that you get less money at the end of 10 years, 20 years, 30 years, negative yield on a bond. Are you kidding me? And yet, there are 17, I forget the number. It's huge, the amount of negative yield bonds that are out there, and they're being bought. So we are in uncharted waters. We are on the end of this experiment. And that's one of the reasons you see the cryptos taking off so much. Whenever you get to the point in history, in monetary history, where there is so much uncertainty, people, the market itself, human ingenuity, comes to the fore and says, I've got a solution to this problem. It's called this, altcoin. It's called this, it's called precious metals. It's called, my own community dollars. I forget, there's some famous ones out there for small communities that make their own currency. And this is because the system at large is failing. And so people naturally go to a competing currency or an alternative method of payment or an alternative settlement system. And so this is another clue that things are not going well, and they probably aren't going to go a whole lot longer.
Yeah. Yep. I tend to think you are correct about it. And that goes to the fundamentals. Anyways, we're out of time for now, but these are exciting times. Don't forget, email us to enter the contest, kl@kerrylutz.com. Check out David's site, themorganreport.com. Check out our site, financialsurvivalnetwork.com. David, we'll be checking in with you a lot more in the coming weeks and months ahead. Always appreciate your time.
It's good to be back with you, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.